Hi everyone, this is Gargi Chaudhuri back with the iShares Macro Minute to talk a little bit about what we should be focusing on the morning of midterm elections, especially as we await the results of some of the key races that may not be determined for some time. Normally, when we've had a divided Congress in the past, that's been good for equity markets. But this time around, I think there are a couple of other big macro drivers in the markets that are much more likely to drive price action in the near term. So for example, tomorrow morning, we are going to get a look at CPI. And as we all know, that has been a big driver of both bond and stock prices. And I expect that tomorrow we will be paying close attention to how inflation is transpiring, if it's moving lower, whether that's coming from goods or whether that's coming from the services sector of the economy. The other thing that I think is different this time around, and previous historical analysis can probably not be used, is because there is an expectation of a slowing growth, perhaps even a recession looming in the months and quarters ahead. And again, that can have a very different outcome on equity markets, which is broader than just the results of a divided Congress. Here in iShares Investment Strategy, we're telling investors that they should be very cautious about liquidity going into year end. Think about using liquid instruments such as ETFs in your portfolio. Think about the role of bonds in your portfolio, especially given the incredible yields that something that is earning you, that is in the front end of the bond markets. And then think about remaining quite defensive in your equity market positioning with minimum volatility as well as allocations to healthcare and energy sectors. That's all for today. For more of these insights, follow me on Twitter at Gargi_Chaudhuri or visit iShares.com/insights.